Hey everyone, welcome back to Fiscal Voyage. This is Felix, and today's video we're going to talk about a stock that I've purchased before. I made some videos before on this stock, but I bought more shares. My last buy of 2024, and we're going to go to my interactive broker account. You can see here on the 26th, I bought more shares of GPC, and at $116.33, about close to $2,000 there on GPC, and then you can see some of the other buys that I've done. Made videos of VICI, NNN, and ARE. But MDLZ as well. But we're gonna go over GPC and why I bought more shares at $116.33. First off, we're gonna go to Fast Graph, and we're gonna see here Fast Graph. If we max this out, there's been very short opportunities wherever this stock had a PE ratio of under 15. You can see here over the financial crisis in 2008, 2009, maybe some peekaboos here in 2011, maybe here in 2012, and then during the COVID crash. So this is why I bought more shares. This is a high quality company. You can see here's BBB rated credit score, was investment grade. Decent long-term debt to cap ratio, and it has a PE ratio of right now at 14.4 with an earnings yield of almost 7 and a nice 3.4% dividend yield. So all that looks good. Earnings sometime erratic. You can see here had a down year in 2020, 7%, a down year in 2016, 1%, and this year or 2024 they expect another down year, but some recovery for 2025 and 2026 going forward. Now we're showing this time period here, and to more recent years, you can see here if the company were to revert back to a normal multiple around 19.4, you could have a annual rate of return of 25% from this price point, which is very doable because you can see here it tends to follow that 19.4%, the normal multiple. And if we go to sales here, you can see sales, they're expected to grow for the next few years, 4%, is grow this year 3%. So sales will continue to grow. And if we go to EBITDA, you can see here EBITDA also expected to grow this next year and the following year. It is expected to be down about 4% this year, and that's what's probably driving the prices down. Earnings is expected to be down, EBITDA is expected to be down, cash flow is expected to be down, and free cash flow. But it still covers the dividend. The dividend is well covered in operating cash flow and free cash flow. You can see here. So that looks good. And we go to operating adjusted earnings. So you can see here the negative 13% in earnings drop. So that's kind of like what's bringing the price down for this stock. But now we go to Morningstar. You can see a Morningstar gives it a 4-star rating with a fair price of 132, and CFRA gives it a 12-month price target of 125, and is this hasn't been updated, but it's around 116. 3-year projected earnings growth more or less in line with Fast Graph, around 5%. So you can see their earnings are expected to grow, and they have a fair price of 120, so it's slightly undervalued based on CFRA. Now, if we look at the technical side, what I want to look at is the 3-month chart here, and you can see here, and I probably covered this in the previous videos when I covered this stock. This is resistance, resistance, resistance. I'm going to draw it for you guys right here. Resistance there, resistance here, like that. Resistance here, resistance here. Now it becomes support here, and that's kind of what I'm expecting, some support here, and it goes in line more or less with this moving average. So we could get a drop, something happens, news, some event or something, and this could get to 105 to even $100, and that will go right nicely with this moving average. And when you can see here, that's been great buying opportunity for this stock right at the 50 moving average on the 3-month chart. So this is why I bought more shares. It's right at that support area, resistance support area. But my next level will be around the $100 area. So it needs to fall further down, and I'll be buying more shares of this stock. So this is why I bought shares now, and I expect to be buying more shares around the $100 area. Now if we go remove the 3-month chart and look at the monthly chart, the monthly chart does look like it's gonna go lower. You can see here, this is what's called a bear sandwich. We had a red bar, green bar, and then nice big engulfing red bar. So this is a bear sandwich, or a bull sandwich rather. And so it should drive the price further down, and it should bring it to that $100 area where I will be buying more shares of this stock. So those are the reasons why I bought shares of this stock. If we go back to fast graph and go to forecasting with a normal multiple, even if it doesn't get to that 19 multiple like I mentioned earlier, more than 17.8, you can see here for the next few years you can have a 20% to 21% annual rate of return at the current price. So I like that a lot. Even if it doesn't get, say, a 16 multiple, right? You get a 15% annual rate of return for a high quality company with a nice dividend yield, growing dividend yield. And we go to performance here, you can see they've been growing dividends around a few years ago, 9%, 6%. Last dividend increase was 5%. So that's all good. And now we go to Sinking Alpha. One thing I like to look at is the dividend yield comparison to historic dividend yield. So we go over here. For the past 5 years, obviously during COVID, the yield got up to 6%. But you can see here the yield is almost at 4%. It's been a great buying opportunity here. 3.4, 3.5% are great buying opportunities. So I think if it gets to around that $100 area, 105, it should yield slightly over 4%. And that would be a great buying opportunity. And that's what I expect to be doing for General Parts and Company. And for the most part, there's some, different articles saying buy, it's not cheap enough. This one says a buy opportunity. Don't miss out on this quality dividend grower. It's complicated. So there's kind of like a mixed review of the stock. But you can see here, it is at the 52-week range low. Forward PE is around 14.29, the 3.4% dividend yield. So overall, to me, it looks great. Fast graph looks good. It continued to grow, and this is why I bought more shares of GPC. And we go back to the chart here, and again, I will be buying more around this $105, $100 area. That would be a great buying opportunity. So thank you for watching, guys. Make sure to hit that subscribe button for more videos like this. If you have a stock you want me to analyze, let me know in the comments, and I'll do my best to get a video out for that stock. So thank you for watching, and make sure to hit that subscribe button and the like button, and I'll see you guys in the next one.